Hello and welcome to NDTV Profit and a very good afternoon to Nilesh Kambli, who is the CFO at Star Health and Allied Insurance. Thank you very much, sir, for joining us. Of course, based on the quarterly earnings, it's largely been muted. That's what the street was actually estimating as well. The loss ratio still remains on the higher side. Now, of course, I have a long-term perspective on this. Is this going to bottom out going ahead?
So what we have seen is the growth in our retail business, which continues to be robust at 17%. When it comes to retail health, we had talked about reduction in our loss-making group business, and that we have completely eliminated for H1. In terms of loss ratio, if we see Q2, we have seen a reduction in the loss ratio. Q2 seasonally is a high loss ratio quarter. But with our focused approach towards price increases, recalibration of portfolio, the damp regions reduction that we have taken, we have seen a reduction in the loss ratio, and we see the benefits of the price increase that we have taken coming through in the coming quarters. In terms of profitability for H1, we have grown by 21% from 428 crores to 518 crores. We believe all our decisions are taken on IFRS basis, and the IFRS results continues to be robust with a growth of 21%.
Well, that's pretty interesting. We'll have a chat on the accounting adjustments as well. But the overall impact of GST, any kind of negative impact we can see, any spillover effect in third quarter as well, especially my view is on the long-term policies.
See, what we see is GST impact. We believe we are seeing a very positive impact of this. We have decided to pass on and the entire benefit to the customers. When it comes to the P&L impact, there are three impacts. One is the intermediary commissions, and with the pressure on EOM, the directions are to reduce the expense of management across the industry, and especially for Sahi players. From 1st October, we have decided to pass on this intermediary commission, including GST. So when it comes to Star Health, there will be no impact on the P&L. Pharmacy, there is a reduction in the GST from 12 to 7%, and on life-saving drugs, there is a reduction of 18 to 0%, with 20% of the medical costs coming from pharmacy. We see that this will be beneficial to us. We estimate good benefits coming from this initiative of the government as well. We'll work with the healthcare providers so that this benefit is passed on ultimately to the customers. When it comes to operating expenses, the IT expenses, the rent rates, and the rents that we pay for our infrastructure, there we see that the input tax credit is not available, but it is in line. We'll offset it through the pharmacy benefits that are coming through. So the overall impact of GST is neutral for us when it comes to a pure P&L impact. But what we see is that this 18% reduction in GST, the persistency of our old portfolio continues to improve, and we have seen some green shoot when it comes to October 2025. The new business continues to be robust, and we clearly see customers in favor of buying health insurance more and more, and that's the objective of the government. It's no longer a comfort or a luxury product; it's a bare necessity, and hence the GST is zero. I think that's a very big message the customers are taking.
That's a very important point you mentioned, Nilesh, when it comes to the necessity which insurance product is actually becoming. One more sector is there which has actually performed well in H1 numbers, the strong premium growth coming in the agency business itself. Now, will we see these numbers sustain in H2 as well?
We see a good momentum in October. In fact, it is much more than what we had expected. We believe it is sustainable, because India is a value-buying customer. And with 18% reduction, we see a good benefit to the customers getting passed on. We believe it should continue to grow. And again, the message which the government wants to pass on, it's a necessity. So I think there's a definite change in the customer behavior is what we are seeing.
And interestingly, Nilesh, could you just explain us the rationale why there has been a sharp increase in the commission ratio? Is there an accounting adjustment which you're talking about? Or you could just make it clear for our viewers?
So I'd like to stress on the point is we are doing all of our decisions based on IFRS accounting. Now, when it comes to Indian GAAP, we've always maintained that the cost is upfront, and especially with the 1/n reporting which the regulator implemented last year. Even the long-term premium is all booked as 1 year premium. The second and the third year premium goes to the next years. the insurer and especially Star Health with its expense of management well below the regulatory limit, we have an option of paying the commission to some of the good agents upfront. And that decision we have taken, So hence, when you look only at IVF results, the cost looks elevated. But no, it's absolutely fine, and it's a 3-year cost which is coming upfront. In the second and third year, it will be zero. So it's the decisions are taken based on long-term view of the business.
Well, that's pretty interesting. Nilesh, I have one more question, and that is there any price hikes on the card? A lot of changes are happening in the industry. There seems like there has been a delay, of course, for the industry for any price hike, or will you stay put right now, as of now, let everything settle in, and then maybe next fiscal year start the price hikes as well? Just wanted to know your view on the price hikes. What would be the timelines?
Yeah, so we had taken a price increase last year for 65% of our portfolio, and we have maintained that it will be an annual price increase in high single digits. We continue to maintain that stand, and this price increase is made to offset the medical inflation. Uh, this price increase that we're taking is to offset the medical inflation. There is no GST impact, and hence the price increase will not to take any GST benefits, but we'll continue to increase the price going forward.
How are the growth numbers looking like, especially for the fresh business? Any suggestive timelines and growth outlook?
Yeah, the fresh numbers continue to grow upwards of 20% for us. If we split into agency and direct to consumer business, the direct to consumer business continues to grow upwards of 50% for us, and it is now contributing 20% of our fresh business. So we see a all-round robust growth when it comes to retail health numbers for us, and that impact we are seeing, in the loss ratio as well. For Q2, if we see the loss ratio has reduced from 23.7% to 71.8%, which is a very sharp improvement that we have seen across retail and group business.
And lastly, Nilesh, the question remains is any kind of guidance numbers which you have put out, going ahead, what should the investor community look at after FY28, FY30? Any numbers are there? And if is there any, then if you could give a rationale also behind that.
Yeah, so we have been taking steady price increases to improve on the profitability. We don't want to give any guidance for FY28. We have maintained that it will be a high teens ROE. If we split this into combined ratio and the investment income, with 82% of our investment book in fixed income and 18% in equity portfolio, we see a good 8.25% rolling return on our investment book. If you convert that into an ROE, IFRS ROE, it is 16% plus pre-tax. When it comes to combined ratio, a 97% combined ratio gives a 3% return on operating profits. When you convert it into an ROE, it's roughly a 6% ROE. So it's a 22% pre-tax ROE at 97% combined ratio, and we believe that's the guidance whatever we have given for FY28, and we are confident of achieving it.
All right. Thank you very much, Nilesh, joining us at NDTV Profit and giving the views for the company, and best of luck for the future as well.
Thank you.